I do sports gambling once a year. I go out to Las Vegas for the first weekend of March Madness. And so I said, if it now comes to Colorado, it becomes a much less special thing that I go do. And also it gives me less of a reason to tell my wife that I have to go to Vegas.
This podcast contains the arguably witty banter of two friends, Skippy and Doogles, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
What it is right now,
Early?
tis Skippy. But that's how you get the juices flowing, by coming up on here to talk about glory. That's what we do, is here we talk about glory.
Yeah. How's your week?
Pretty decent. I got back last night. I was out in California for work this week.
Nice. Nice.
Yeah, it was.
So you know what a lot of people do on the weekend? Apparently.
Gamble.
I didn't realize.
Gamble.
Gamble. Yeah. I thought they were breaking down. I thought they were doing hardcore investing research, breaking down the latest Chinese stocks to buy. But no.
Gambling. Also gambling.
According to the American Gambling Association, this NFL season, there will be $35 billion in bets placed.
A lot.
Gambling is now legal in 38 states, Douglas. Okay. So there's this article that I kind of knocked my socks off in a way. I'm sure it's tilted, but it's called Legalizing Sports Gambling Was a Huge Mistake. You get the author's intent very quickly with that title.
Because they're for it. Would you say for or against?
Against. So everything here is a little tilted, but fascinating stats, right? What makes this a great research experiment is simply the fact that it legalized in different states at different points in time over the past 5-10 years. And to give you a little history.
Okay, there you go.
Go ahead.
No, you get the history.
Sports gambling in America outside of basically Las Vegas, starting in 1992, was banned because of this thing called the Professional and Amateur Sports Protection Act. And that seemed to work. In 2012, New Jersey goes, hey, Atlantic City is in trouble and we need to pull a rabbit out of our hat here. New Jersey, the state, changes their laws to legalize sports gambling in Atlantic City effectively. And 6 years later, in 2018, that makes it up to the Supreme Court, and they ask for a formal ruling on the 1992 Sports Protection Act. Gets overturned nationwide and basically says states now have the ability to legalize this thing. So before I go too much into the potential benefits, the thing I love about this is simply the fact that it's like a perfect science experiment where you actually get some quality data, and we're going to talk about some of those research studies. What was your reaction as sports gambling took hold in the past few years, Douglas?
So a little personal anecdote. Anecdote might even be a little strong, but a little personal anecdote around this to answer your question. So when this came up for voting here in Colorado, my reaction was nay, I said. Now, the predominant reason for that, but maybe it kind of lends to the premise of this article, was I do sports gambling once a year. I go out to Las Vegas for the first weekend of March Madness. And so I said, if it now comes to Colorado, it becomes a much less special thing that I go do. And also it gives me less of a reason to tell my wife that I have to go to Vegas. So this was my take. But if I then double click into that, which again touches on the premise of this article.
Sorry, double click into that is officially outlawed on the podcast. Please use a different term.
Okay. If I triple click into this, my broad point is that when something gets it's so easy to do, like click of a button, and then you got all the Apple Pays and all the things, like it's easy to put your money in, easy to bet. It's like even in Vegas, it's changed a heck of a lot, because now in Vegas, I used to have to stand in this long line to go then give them all the numbers. And now they got these kiosks that it takes so little time. What it feels like to me, and this is the reaction you ask for, what it feels like to me is it takes all the friction, and even humanity is really strong, but like the action of betting is so much more mindless that for me, like going into one of these apps, the DraftKings or whatever, like doesn't even feel like I'm betting. I'm just like clicking on numbers. So I don't really do it, but that's my
It
reaction.
doesn't, so it doesn't get your juices flowing. Like,
Not in the same way. No.
what's so funny is I'm not a gambler. I'm sure that's not going to come as a surprise to you. But your reaction to sports gambling being legalized in Colorado is almost my reaction to In-N-Out Burger being coming to Colorado. Like, it used to be the special treat where you could be in California
Yeah.
and everyone cherished it. It was great. And now, yeah, 38 of the 50 states have it. So I was more open-minded. I mean, I kind of thought people are doing this illegally without regulation anyway. And so there's probably some benefit into adding more structure around it and taking tax dollars. I think I don't like what I've seen post legalization, in large part because if you have young kids, you see these ads flashed in front of people all the time. And the human psyche, I think, has enough challenges with addiction that, like, how many honey traps are we going to put out there? Like,
Yeah.
how hard should your average 19-year-old brain have to work just to survive the day or the week, if we put all these gamified things in front of them on their phone?
So I'm gonna react with two different things to that are coming from two angles. So one is that the general Skippy take on things is let market forces play out.
Yep.
And that part of me says we are a little over a decade into this with states starting to roll out. It takes a while for people to get used to things. And so yes, in the first 10 years or so, it could be expected that folks are going to get all their jollies out. They don't really know exactly how to manage themselves through this process. And eventually it'll just become a part of maybe I shouldn't say a part of everyday life, but it'll be more ingrained in society such that we will be able to regulate. But that's like I mean that not from the government standpoint, but individual standpoint. Ads dollars will either play out and they'll figure out whether they are profitable or not. And so those might deplete. Like that just may play out over time, but it could take some
Yeah.
time. That's one side. The other side that gets a little bit more to the point, the last point you brought up. I just finished this book, The Anxious Generation. Have you read this?
I read a very similar book. I've not read that one. I'm curious for your take.
Similar book? Okay, I don't know what you're talking about. Similar book. That sounds like a cop out. But this book, I will sum it up. There's lots in the book, but I'm going to sum it up by saying this. It talks about the connection between two different things happening over the last 30 years. The first is that starting in the 1990s, parents became much less willing to let their kids be free range and like go and explore by themselves earlier, et cetera. They call it safetyism. And that's not necessarily, according to the book, the parents' fault, but society has started like you can get arrested if your kid is is going to the grocery store, right? That kind of thing.
Yeah.
So that's one. The second is the onslaught of social media and smartphones. And so when you take these two things, kids are less likely to be out earlier, like on their own, just, running an errand or exploring or playing with other kids. And you've got this highly addictive device that's now in their hands with social media and whatnot. And that has created coddled minds. That's the central theme of it. And that to me, it's a bit of a similar thing. If now you're throwing gambling ads, it's like, what else can you put in front of these young, impressionable minds?
Mm-hmm.
That's the question.
Yeah. So let's let the listeners pick a side here with three papers cited
Ooh,
by
okay.
this author. Okay. First is a Northwestern study that we have talked about that estimates that for every dollar spent on betting, households put $2 less in investment accounts.
Oh my
On the
gosh.
Skippy and Doogles show, that's going to be a backbreaker for, right? It's not good. And by no means can anyone convince me that gambling on your favorite NFL team has any parallels to investing. It's not the same ball game. Okay, so that's the first study. The second study comes from UCLA and USC, and it says that if you specifically look at online sports gambling, it increases the risk of troubled households going bankrupt by 25 to 30% and also increases debt delinquency. What this study says, I believe, at the highest level is simply these people that might be in financial troubles when they also live in a place that has this temptation. Maybe I'm speculating here. I'm not talking about anyone in particular, but maybe if you're on the brink of bankruptcy, you've already proven you're not great managing your finances. And so if you put another like stressor out there, another competing gambling thing for those limited funds, it
I'll give a
seems to lead
different
to bad outcomes.
I'll,
Okay.
I'll give a different take on that one. There's also this mentally, if you get in this place where someone is, I'll call it on the brink or close to that,
Mm-hmm.
you can be on one of two sides of this in this little story that I'm telling, that I'm weaving here. One side is I'm behind on my payments, and if I just had 200 more dollars, I'd actually be free and fancy free. If I bet this $100 on the New York Football Giants playing the Washington Commanders,
Yeah.
boom, I could be there. Done. That's one side. The other side is that that's the negative trying to get positive. The other side is that you're still thin margins, but you're on the positive side, and losing that $100 actually now puts you in a bad place. Either way, it's just when you're living, it's called paycheck to paycheck on thin margins, these seemingly small bets, whether it's $5, $10 that are adding up or whatever it might be, can put you on the other side. So I get that. I get that. I get that mentally. It's quite a temptation. The last one, what
Well,
got me
so
here?
the last one comes out of the University of Oregon. And actually this is widely cited pre-gambling, and I'll tell you some stories about that. I'm curious if you've ever heard this, but it relates to domestic violence. Sadly, previous research has found that if an NFL home team has an upset loss, the chances of domestic violence increase by 10%. And what this study out of the University of Oregon found is that gambling seems to multiply that negative consequence by roughly 9%. Like, again, I know these are cherry picked results. There's not much coming up good on the pro gambling side. Even if you start with the high level, well, it's $35 billion that get ejected into our economy, and there is some tax revenue from that. But if anyone knows roughly how the house structures these deals, 10% of that is coming off the top, win or lose, and going to the house, right? So 10% of that money disappears.
Yep.
And the rest, call it a coin flip. It's not like holding an asset in terms of a bond or equity in a home or stocks or 1,000 other things that could be, investing money in your small business. None of these outcomes are particularly great in my eyes.
Agreed. It's a little bit so far. It's like my view on childcare, where childcare costs so much money for the consumer, and the person taking care of the child doesn't make that much money.
Yeah. Feels like
This
there's a
has
lot of waste in the system.
Yeah, there's a lot of waste in the system. Now, again, going back to the market forces, we're still relatively early in this game, and so we can see how market forces start to play out. The
Mm-hmm.
domestic violence one aside, because that's
Yeah.
a different level than the others. But there's still room to see how the market ends up playing out here a little
Hey,
bit.
hey, so the thing I wanted to talk to you on the domestic violence front is, had you heard that before?
No, the no is the short answer. The longer answer that's unnecessary is I've heard things like a judge is more likely to give someone a harsher sentence if their home football team has lost. I've heard things like that.
Well, and right before lunch when they're hungry, it's a bad time for a judge to do a
There you go.
sentence. Yeah, there's all sorts of factors like this. Anyway, I don't know if this is Colorado specific because I grew up here and you did not, but the Denver Broncos in like 1990 held a special place in this state's heart because there was not much else going on, right?
Yep.
And so the entire state's emotion would live and die with the Broncos. And this was a frequently quoted stat in Colorado in like the 90s.
Oh
And
wow.
seriously, you'd be like, I was aware of enough of it to be like, gosh, I hope they win. But man, I really hope they win because there's no reason for people to get beat up over this. Like,
Oh, that's
um,
terrible.
yeah,
Terrible.
terrible.
I'm gonna completely switch gears. Is that okay? Because you're taking us down to a dark place.
Uh, yeah, sorry about that. No, we are going to switch gears. I want a closing thought from you, though. I am a free markets guy.
Yeah.
I generally think regulation makes more sense. I'm really on the fence about this. I, I've watched it, and I've watched other things happen in my community. Other things get legalized with what is seemingly no impact on the community. Sports betting being legal in Colorado, I don't love it. If I had a do over, I think I might ask for it to be how it was previously. Like, where do you sit on the spectrum? Just
I mean,
curious.
one, as I told you, I voted no. I've already put my money where my mouth was.
Mm-hmm.
Or actually there was no money, but you know what I mean. I put my votes where my mouth was. I think at this point it's come out, and I would say let's let the markets play out a bit and keep watching it. It seems like sports gambling is taking what's already happening in other parts of society as well. I mean, people are margin debt was like increasing, right? I mean, people are just doing this in other ways. So I don't know that this is if this is exacerbating a situation. I don't know if people didn't do this, they would just be doing it in a different way. I don't know. But I would say it is where it is. Let's let the markets play out. States will probably figure something out or people will self-regulate is where I stand right now, given where we are. But if we had to do it over
My,
again, yeah, I'd vote no again.
yeah, well, so the crazy thing about that bill is it barely passed, right? It was like 51 to 49 or whatever.
Yeah.
Um, I think if I was mayor of the state and I could make changes, I don't know that I'd make it illegal, but I think I'd add some guardrails. Maybe there's certain limits on how much you can bet per day or how many times you can log into the app, or it goes to that almost Instagramification of these
Yep.
apps and how easy it is to log in. I think
Or you
there
handle
needs to
it
be.
like in the tobacco game through taxes. It's another way.
I mean, that was already pitched. Anyway, let's move
Yeah.
on.
Yeah. Yeah. Let's talk China. And specifically, I want to start off. We'll get some generic, general China stuff going on here, but can we start off with David Tepper?
Please.
I want to I want to play a part of an interview with David Tepper on Squawk Box to kick things off. That cool with you? David Tepper. He's talking about Chinese stocks. They've been taking off over the last few days. There's a China stimulus package, which we can talk a little bit more about. And that's what he's discussing here about these Chinese stocks that he has seemingly bet more on at this point. So that's the context. And now we're going to take a little listen.
And for those who don't know, David Tepper is a hedge fund manager, very successful, owns the Carolina Panthers. To give you some idea of how successful his investing career has been, he has multiple years where he's been rated as the highest paid hedge fund manager with compensation around $2 billion, and that is for a 12-month period. He's done all right.
There it is. He's done. He's done all right.
You can look at these names, and you're talking about single-digit PE multiples with double-digit growth.
But you think there's
And wait a second.
Yeah.
This is the other thing. You have some of these stocks with 50% cash. Some of these things you just put up on the board, 50% cash, 20% cash, 30% cash, and that cash, depending how the Chinese currency goes, maybe if the Chinese currency is really strong, they'll want them to buy back.
Okay, so David, let me ask you.
They're asking, did you see this thing? Buying back stock, when companies buy back their stock.
Right, but you're a hedge fund. How do you hedge your risk? What's the counter bet that you put on that, just in case?
You know what? You know, I'm sitting here in a suit. My counter bet is that I don't care.
That's so good. That is so good. There was in that like 1 minute, it was a little under 1 minute that we played. There was a little bit of Skippy and a little bit of Doogles in that one 45-second clip we just played, and I was loving it.
Some fundamental analysis and the phrasing still gets to me is like, I don't know why he had to say I'm here wearing a suit. He should have just said like, the deals are so good I don't care about hedging my risk. I think that's effectively, is that the translation?
That is the translation.
Oh, Douglas, I did not kick off with this because I don't want to be a homer. Like I don't want to. This is tough to talk about.
What do you mean?
Chinese stocks went up about 16% last week.
True story.
Leading the charge for that was JD, Alibaba, a few others.
Yep.
I've told you on the show, Alibaba's my top holding in the outside of my quantitative portfolio. We've talked about it almost since the show started. It has been as low as something like $60 a share. It's currently trading around 110.
Yep.
And most of that happened last week. I mean, last week was like a move 90 to 110. So the David Tepper interview floored me. I don't follow Squawk Box. I don't watch it. I don't, right? Like, it's not of interest to me. But he is so passionate about, and the backstory, if you watch more of the interview, sounds like he called those guys up post the China stimulus and said, I need to come on the show. I want to talk about China.
Yeah. Yeah. And one of the things we're not playing out here, and this gets to, or not, we're not playing a part of this interview, and this gets to Wonkville, a little bit of Wonkville. And if add some color, call me out, whatever comes up here. But the bet that he's placing here, in addition to what he talked about around fundamentals and cash and all that, the current macro bet of why he's saying doubling down, tripling down, who knows what he's doing, but he's downing. He's Churchill Downs, this guy. What he's doing is he's saying that when the US is bringing down rates and he's betting that the Fed is going to do what the Fed has stated it's going to do, which means that if you look at the difference between where interest rates were and where inflation is and where they want it to go, there's a gap. And some of that gap will be closed. This is what he's saying the Fed's going to do. If you look at the dot plot, right? The dot plot is what the Fed's best guesstimate of around their intention for the future. If you look at that, Fed's going to continue to lower rates. If the Fed lowers rates, then this is the bet he's making. If the Fed lowers rates, then China then says, okay, on one hand, our exports can become more valuable because there's a devaluation of the dollar. So that happens. Our currency relative to the dollar can become more valuable. And so therefore, if we're going to stimulate, this is a time to throw all the monies up in Checha. That is the macro bet that he's playing in addition to the fundamentals.
Well, and like you alluded to it, but there's more than that. So one, he's saying the US Fed, based on their language, like I'm not a macro investor. I don't follow this stuff. He said he feels they've already committed to 3 more rate cuts in the near future.
Yep.
That's going to stimulate equities in this country. And then China's playing off of that, but China just released this massive stimulus package. So China's version of the Fed is spending 12 trillion yuan for greater financial supports for, I mean, the list goes on and on. I have an article in front of me of all the different facets that they're spending. They're planning on boosting domestic consumption. How does that clearly benefit JD and Alibaba? It clearly does. So I think his larger bet is, hey, you look at some of these deals in China. He alluded to it with the fundamentals of these stocks, which drew me to these companies. And then you say they're spending on this side of the Pacific, they're spending on that side of the Pacific, and just don't fight it, man. So he has the whole interview is fascinating, but there's another piece of that interview where they ask him what specifically he's buying, and he just says everything. Like,
yeah,
he's just saying everything. I'm blown away by it.
Yeah. I also, to when you were saying you don't have it quite in front of me, but there's a lot of stuff that the Chinese stimulus package is trying to do. What I love is in this, and we will put this on the Substack, Skippy Doogles at substack.com, so you can watch this video. What I love is that he holds up a piece of paper, like he brought in the printout of what China said it's doing. He holds up the piece of paper, and he's like, "Did you see this?" And it's so, for me, the reason I love that is because you can get your quantitative models, your algorithms playing out, and he's just holding up an 8.5 by 11 sheet of paper and being like, these words, that's all it takes is this printout, this wrinkled printout. I love that.
So I've held Alibaba for a long time. That looks like a quality investment on my end. I purchased JD to diversify away from Alibaba because ultimately at some point, whatever, 12 months ago, I realized that my bet with Alibaba was largely a bet on Chinese stocks because it was the most depressed stock market in the world,
Yep.
effectively.
Yep.
So I wanted to diversify away from that. And then you and I, what was this, Doogles? 3 months ago, we're texting about Yum C,
Yep. Yum
which is
China.
Yum Brand's China version, which has these growth numbers like you don't see. I mean, you don't see in developed markets. And also had a really strong cash position and something. When we were texting about that, I don't even think it's 3 months ago. I was telling you to get in. It was at $30 a share. It's currently at $45 a share, like overnight.
Yeah. And this is one of these places. Let's say that all these Chinese bets work out, which I hope they do, because you're all up in it. I got nothing against that. I love it. This is one of these places where human psychology, you can get past all the fundamentals, or can't get past all the fundamentals and just get in your own way. This is Douglas here. Because if people have been listening to this show for a little while, you know a few things have happened. The very first episode of this here podcast, we were talking about China Mobile. I bought China Mobile. Trump was like, nah, bro, you can't trade. I mean, like he can do that himself, you know what I mean? But he, yeah, Trump was like, nah, bro, you can't trade, bro. No, but so the government, US government, banned China Mobile. And so China Mobile is delisted. Boom, Doogles. I had Tall Education Group, a Chinese education company. China came out and said, education is not something you can make a profit on. Tutoring in this country. Tall Education Group got hit. I bought Alibaba with you. I've gone through so many stressors with China over the last few years that I see all these things and I'm just like, I just can't. And it's fine, right? In the long run, it's fine. It doesn't really, but I'm just like, I just can't with China right now. Like, sorry, China, I just can't with you.
But so that's incredibly relevant because I won't let these positions run nearly as long as I would. We talked about this
Yeah.
with
Yeah.
is Alibaba investable many years ago, right? It was like, oh my goodness, it's so cheap and the growth potential is great, and you get access to an entirely different portion of the world than you do with Meta or Amazon or whatever. It was so tantalizing, but it was really tough to get comfortable with. But now these companies, they've caught fire, and it's amazing because most of them have incredible balance sheets. Most of them are buying back stocks, and now most of them have their hair on fire with Chinese stimulus and potentially more money flowing from the U.S. Like Alibaba specifically opened up share purchases to the Asian market within the past 3 weeks. So it was really hard for someone in China to actually own Alibaba, the company, until recently. There's all sorts of additional demand coming from that. I mean, I don't know. That's the hard point now, Douglas. I've made nice returns on all these things, and I got to decide how to exit because I don't want this much China risk on my personal balance sheet, right?
As much as you say that, you keep accumulating. You're like David Pepper. David Pepper. Now I can't even say the man's name. Like making me sneeze.
Okay. So one more thing that David Tepper said, which the whole interview is amazing because theoretically you can call him one of the more successful investors of our era or whatever. Like I said, I'm not a huge fan, but whatever. He talks about how he had self-imposed holding limits, specifically with Alibaba, which I think is his biggest holding now. And those were somewhere around 12% of his portfolio. And he's basically going back and forth to the host, including Becky Quick, who cracked me up because we saw her in Omaha, right? But basically going like, she's going, what about your rules? And he is saying without saying, like, I don't care at all about my rules, strongly implying that he holds like 25% of his portfolio in Alibaba at the moment. It's just fascinating. You see the human psychology of how challenging investing is for everyone, for your mom and pops and your professional investors that make $2 billion a year.
I think I've said this on this pod before, but it reminds me of one time where you've seen Rounders, right?
Yeah, it's been a while though.
So in the movie Rounders, which for those that have not seen it, go watch it right now. What are you even doing? Rounders, late 90s movie, Matt Damon, poker, love the movie. Mm-hmm. There's this point in the movie where Matt Damon goes and he plays poker in Atlantic City. And when he sits down, it's basically all the same people he plays poker with in New York. And they're like, why do we even come down here if we're just going to play together? This happened to me one time. I used to play poker back in the Bay Area. There was a spot I went to. I flew to Vegas, sit down at this table, and it's like half the people that I play poker with over in the Bay Area. And so basically what we did was let the other seats play out. Like we just kind of sat there
Yeah.
and the people would come sit down. But this one dude during this, the reason I'm telling this one dude at some point, he says to me, some guy sits down, plays a couple hands, and that was the fish. Like it was very obvious that was the fish. The fish being someone that cannot play very well. And he said, sometimes you just gotta wait, man. And when they sit down, you jump on that saddle and you ride them like Seabiscuit. This is his Seabiscuit. This is
Yes.
what David Tepper saying. He's saying when you see it, you have you got all these rules for, he has all these rules for himself to regulate, in general. But when the whale comes, hop up on it. That's what he's saying.
That's an incredibly, for those who haven't been through it, and I assume all the listeners pretty much have at this point, but we have a lot of listeners that just do the index thing very wisely and are great investors. But man, it's so challenging. I've been telling you for years now. I felt the agony of owning something like Alibaba, and then in an instant, in 5 days, your returns can go to a very sweet spot. And I still, Douglas, this whole week was going, gosh, was it worth all the pain and torment I put
Yeah,
myself through
that's right.
for China exposure? Like, this is not fun.
It's
The outcome's going to turn out great. This is not fun at all.
all got to make our own decisions. Okay, I got one last thing. Can I hop in, or do you got something you want to touch on?
Go for it.
Okay, region of the fishbowl. I want to do this. You yelled at me earlier because you said it's no surprise why you wouldn't want to talk about it. I want to talk about OpenAI.
Yeah. No, we'll talk about it real quick. The show needs a shout out. We did a high level breakdown of Visa like 3 weeks ago, and we said the business is so good that it's very likely government is going to get involved. And there's a 64-page deposition on
Yep,
monopolistic
that's right.
capitalism. So just shout out. Yes, let's talk OpenAI.
Okay.
The most obvious thing happened.
This is true. So, couple of things. So, OpenAI, it was founded roughly a decade ago and founded on the premise that we need to make AI, which is going to be inevitable, safe. That's the premise. AI is going to be inevitable and we got to make it safe. So, therefore, the structure of OpenAI is a nonprofit. There's also this for-profit-ish entity that sits within that nonprofit, but the nonprofit runs it. But there's this nonprofit entity, or sorry, for-profit entity that sits inside of it. And the reason I say ish is because this entity can take investment, but they cap returns. They cap returns like 100x. So it's not like you're capping returns at 10%, but still returns are capped. So you get someone like Sam Altman, who CEO of Alibaba, or sorry, is he CEO of Alibaba? Oh my goodness. CEO of OpenAI. And he doesn't own any shares. He's doing it out of the goodness of his heart, right? All this stuff. Meanwhile, this dude's the most capitalistic guy ever, right? YC, he's founded a bunch of companies. So how long can this last? This is why you're saying no surprise to anyone.
Mm-hmm.
So now they're looking to convert OpenAI just as a whole to a for-profit entity. That's one part. Now you get all these executives that are just exiting from OpenAI because they went like, this is not what I signed up for.
Like everyone except for him.
Like everyone. It's looking like the board of 23andMe. How many people are exiting over here? Just Google that if you're not sure what I'm talking about, people. Just go Google that. The other thing that I thought was interesting, though, that's one part of it. This past week is there's this TechCrunch piece that I enjoyed that is titled Sam Altman Catapults Past Founder Mode. That's a reference to a recent Paul Graham essay into God mode with his latest AI post. So Sam Altman wrote this post about AI. What this TechCrunch writer, Sarah Perez, does is she takes the post that Sam Altman wrote and then it kind of goes like point by point and says, is this hype? Does this seem realistic? And I love this fact. We can run through a couple of things she says. It's not even important, some of the stuff that she says, but the reason I like it is because when you get technologies like this, like artificial intelligence, people then you could just take it forever. Like, what is the most optimistic potential that this thing could run with? And Sam Altman is trying to run with that. And she's just saying, check yourself. You can go back to If anyone wants to go back and Google some of the pieces that came about the internet, the consumer internet back in the mid 90s, you'll find stuff like this too. There were people that were just complete naysayers of like the internet's a whole bunch of garbage. And you have people saying the internet can do all these wondrous things, right? That always happens. So I'll run through a couple. I want to get your view on this. Some that she says are hype, some that she says are not, which are fairly obvious. Okay. One, the first one, AI will help us solve quote unquote hard problems. It's like, obviously, that's so benign, obviously.
Mhm.
Then Sam Altman starts to get in some wildness. We can have shared prosperity to a degree that seems unimaginable today. In the future, everyone's lives can be better than anyone's life is now because of AI.
Everyone?
Yeah, no, yeah, exactly.
No. Let's
Everyone
hope
or
for the
you who,
majority and call it a day. Not
yeah,
everyone.
is it everyone or is it you who is now taking stock in the organization that is valued at $150 billion? This may turn out to be the most consequential fact about all of history so far. It is possible that we will have super intelligence in a few thousand days. It may take longer, but I'm confident we'll get there. First of all, when you're throwing out few thousand and days, this starts to get to some Dow 36,000 type stuff. Like some,
No. You could
okay.
say like a few thousand minutes, and theoretically that could be till infinity. Like it's a nondescript.
Few thousand
What is
days.
it? What is he trying to say with the 3,000 days? Like within a decade? He should just be more specific. It's garbage language.
Yeah, I know. I think that's basically what he's saying is that like getting to the point where we have general artificial intelligence could be in the foreseeable future. We have line of sight. I think that's kind of what he's trying to say. A few
Yeah.
thousand days is utterly ridiculous. So these are the kinds of things we'll put this on the Substack too. But I love the fact that she just goes into his piece, which is a piece where he is trying to say there's this thing that is going to be the next best thing since sliced bread. I happen to be the leader of the organization that's leading the march here. I've done all this out of the goodness of my heart so far. Can a brother get a bone? Like that's I think what he's trying to say.
Do you know how unfortunate it is? I don't, the non-for-profit for-profit thing doesn't fire me up. I like, most businesses are for-profit businesses for a reason, because it's odd to just run a business out of the goodness of your heart, especially a business like that where you're trying to scale and grow and have people
Yeah.
write you checks for your power consumption costs and your NVIDIA GPUs and everything. Like they never made sense. But it was such an obvious oversight that he had no skin in the game. I mean, he clearly did have skin in the game because he already got fired once, found a way to get back the seat in 72 hours, and then has such strong feelings about the future of the company that he appears to have pushed the rest of the board out. But the structure of him never having any equity because he was already independently wealthy was just
Weird.
dumb. It's like it just never made any sense.
Just-
I remember he was in front of Congress or someone, and they were asking him about that, and he said, "I own nothing. I take no pay," and it was just like, how obvious to you is this that this is a bad structure? You should not.
Yeah, I mean this
You should not run a company and have no skin in the game formally. It doesn't make any sense. It doesn't matter what your previous wealth is.
and it really brings to light the I don't know, what do you want to call it? A tussle, whatever, the kerfluffle that happened when he was thrown out for like a few days. Like it brings that to light here because what happened, if y'all remember, what happened during that time was he was trying to raise billions of dollars for a different AI organization. Do you remember that?
Vaguely.
Yeah, he was trying to raise billions of dollars for another AI organization. So you can see, like reading behind, you don't even have to read between the lines, just like read the book, read the page. And what the page is telling you is that there were these conversations happening at the board level where he's like, this thing is a thing.
Yeah.
We can take to this to the next level. In order to do that, you got to have the skin in the game. We got to make this for profit. They were saying, no, that's not what this is all about. And he goes, I'm going to go show you what the power of this is. This weekend, I can raise $10 billion in order to do this.
Because he had like 7 additional job offers when
Exactly.
anyone, and
So,
blank checks to do it. Let's. I know we got to wrap up. Let's just put a bow on AI for a second.
okay.
Perplexity, the search engine, has been knocking my socks off. I told you a while back that this is a year ago maybe that I felt Google was going to have to innovate. And I played around with like Chat GPT and others. Perplexity is branded as just an AI search engine. I like it a lot. The other thing that's worth mentioning, I think, is Meta now they claim this week that they have 500 million active users of their AI technologies.
Wild.
And that's because they embedded them in their current user base, which is 3+ billion people, in all their apps. And that is, when I think about evaluation of OpenAI or Perplexity or any of them, I mean, there's so many great tools out there. It's kind of like, it's amazing the head start that Meta can get on some of these things and provide it for free, because when the tools are all so sophisticated now that when I use one versus the other, I walk away impressed. None of them are bad, and they all seem to get better every 3 months. I just continue to say, where's the return on investment here?
It'll come down the line.
Yeah.
But
and
not necessarily to the people that are paying for it right now.
So Google came out with it's fairly detailed list of 148 use cases for generative AI. And they say this company did X and here's the result. And I read through it. There's a lot of impressive stats there, mostly related to reducing human needs for some sort of customer chat support. I think that ROI is already here, but the other stuff, I don't know. I mean, maybe that's why OpenAI is worth roughly 150 billion.
We'll see if it actually is, but I think you're right as far as valuation goes. We have to go through some version of this might be too strong, but some version would happen in the late 90s to early 2000s, where you got to invest, see what sticks, see what doesn't, and things will fall apart. What those things are, we don't know. We don't know which companies, which technologies, but got to play the game and see what happens.
Perfect. Thanks for hanging out with us today, guys. Hit skippydoogles.com for all things related to the show. See David Tepper lose his mind and try and what's he saying about a suit? I'm a guy in a suit, so I don't need a
I don't
have to hedge for
my
one of the
hedges,
world's riskiest economies to invest in. I mean, come on, David, keep your hedge on. All right. You can also get premium subscriptions if you like the show, think our banter is hilarious, and want to support us. That allows you to get episodes a day early and some other premium benefits when we drop special episodes for the premium listeners. That's at skippydoogles.supercast.com.
Thank you, everybody.
Peace.